Welcome back on the chat, guys. This is my trading journal, and this is where I'll show you the trades I took this week. So far so good. This is what I've been using to show you guys the trades I've been taking on a weekly, daily basis. So first of all, what I will do is I'm going to take you guys to my Telegram channel. Guys, I have a free Telegram channel where I document my daily trades I take every day. So if it's something you're interested in joining, please use the link in the description below to join into the group. It is free. I post my trades before I take them. It might not really always be all the time because sometimes I'm actually busy, but I post trades there. And I post some educational content about my model. The OG know that my model is actually what CRT, which stands for candle range theory. Do you understand? So if I'm to go to my Telegram channel where I post my weekly outlook, first of all, before I do anything in the financial market, I do a weekly outlook to actually know my weekly buyers and how I'm going to trade for that week. So this is my Telegram channel. You can see Allergen FX Trading Community. We currently have about 49 subscribers, so you are welcome to the channel. So now if I go back to where I posted it, my weekly outlook, see a lot of educational content. So this is where I did my weekly outlook. Like you can see here, you can see this in the top down analysis weekly outlook CRT model. I basically trade only what Euro USD, like the OGs know, only Euro USD. You can see the weekly outlook was on the 21st of April to 25th, which is the 1 week. You understand? So the first thing I do is I go on DXY to do my analysis, because the DXY gives me a general direction to know how the Euro US is going to move. So you can see here I said DXY monthly time frame bearish projection. I was still bearish. I was still bearish bias on this DXY from last week because I have a monthly FVG sitting below. So I expect price to do to sell off into this monthly FVG before we can have a little bit of retracement, which is a buy setup. Do you understand? For that week. So you can see I went to the weekly time frame of that same DXY, and I was anticipating. I said that my first draw on liquidity, which is the DOY, was this low, that the market is going to push lower just to take out this first draw on liquidity before this monthly FVG. So basically that was what I did. Even the same thing on the daily time frame. So do you understand? So the same thing on EU. I was now bullish projection on EU. And this is the monthly time frame of EU. So I was still bullish intent on EU, and I said here that on a weekly time frame that I expect EU to do to push higher to take out this first drawn liquidity. So guys, I'm going to show you the outcome of this thing. You can see I'm going to show you, but let me show you before I go on the trade. Now look at what the market did that same Monday on EU. This is what the market did on EU for DXY. You can see what I said. Look at it, took out that this was on Monday. It took out that drawn liquidity on DXY. So it's now currently in our monthly FVG. You can see how look at the EU. It took out that drawn liquidity. So that was what I saw and I was expecting. So if I'm to go back to my chart to show you the trades I took for this week, so if I'm to click my trade journal, come on, is loading. So this is my trade journal. So this week started with which is on Monday, which is the 21st of April. So I took the first trade that turned out to be lost, like you can see on my screen here. So if I have to click on it and explain why I took this trade and why it was a sell setup, you can see it is sell. Meanwhile, the general market is it is buy. But the reason why I took sell was because the market has taken that first drawn liquidity I just showed you guys. So I expect a little bit of retracement on a daily time frame. So when you're expecting a retracement on the daily time frame or a monthly or weekly, you should expect that the lower time frame you can use that retracement to catch a very big move on your lower time frame. So in this situation, that was what I applied here. So you can see the direction for this trade was sell, and it turned out to be a loss. Now, do you understand? And you can see it is actually a counter trend, because I'm going against the trend, but with a reason backed with it. So look at the screenshot. As I said, the general trend is bullish, but has taken the first draw on liquidity. Therefore, I expect price to retrace to fill the imbalance below before a continuation of price to the upside. So this is basically what I just said to you guys. Because price has taken this draw on liquidity, so we expect price to actually retrace a bit before it can continue higher. Do you understand? So I went to my 4-hour time frame to basically look for more of my CRT model. So in this case, I waited for the 1 a.m. candle to purge. I waited for the 1 a.m. candle to purge the 21 o'clock candle, and in this case, it did that. But now let's see the outcome. So after upon seeing that, you understand, I went to my what, my 15-minute time frame to look for my what change of state of delivery, which I got here. But guys, it turned out to be what, a loss, a losing what, a losing trade. After seeing my what, my change of state of delivery, this trade turned out to be what, a losing trade of what, 0.5%. The reason why I risked 0.5% was due to because it's a counter trend. So I said, okay, let me go for what, 0.5%. Remember, I told you guys in my previous video that this week I was going to be risking what, 1%. But in this situation, I decided to what, risk what, I decided to risk what, um uh 0.5%. So let's go to the what, to the next trade. That was the trade for the first trade. Was what was a losing what trade. So if I'm to go to the next trade, which turned out to be what, the winning trade of that same what scenario, I was still what, bearish in mind. So I got another opportunity on my the same analysis and all of that. Do you understand? But in this case, I waited for what, my 1 a.m. candle to purge the 5 a.m. candle. Now look at it. I waited for my 1 a.m. candle, in my 5 a.m. candle rather, to purge my 1 a.m. candle, which happened so good on 4 hour time frame. Upon seeing that, I went to my 1 hour time frame to look for a 1 hour candle that will close inside of that range. And you can see in this case, it closed back into this range. And upon seeing that, guys, head straight to my 15-minute time frame and saw a clean what, change of state of delivery. Guys, look at how beautiful this trade is, giving me what, a 3-hour win return. This is what I was expecting it to happen here, but it didn't happen because I have a 2 trades per day. So I've taken one loss. So my second trade will be in the last trade, which this was the last trade, and it turned out to be what, a winning trade. I'm going to show you the screenshot. I took all these trades. I didn't understand. So that was a what, 1.5% what, 1.5 hour gain, because I also reached 0.5 on this trade. So that was the 2 trades I took for Monday. So if I'm to go to my journal back to tell you the next trade I took. So let's go back. So the next day there was no opportunity for me, so I didn't take trade. That is what we call what, being disciplined. They are, which is on Tuesday no trade, on Wednesday no trade. So it came to on Thursday. That was when I now got another trading what, opportunity. So in this situation, my first trade was turned out to be what, loss. So if I'm to explain the trade for you, it was still what, bearish, because I expected price to actually sell off for a bit. So it obvious that it took my bias for this week turned out to be what, sell bearish. So now in this situation, guys, since I my percentage at that time was now around 4.something%. So I decided to say, okay, I can reach 1% of this my account to know if my trade will hit TP and I can actually pass this phase 1. So guys, you can see on my daily time frame, same analysis, I was still looking for what, bearish opportunity. Do you understand? Now same analysis and same analysis. No, okay, I wasn't so this wasn't supposed to be the first trade. Sorry, let me go back. This was supposed to be the second one. Sorry guys, for that same Thursday. Okay, this is Thursday. This is the first trade. Turned out to be what, break even rather, before I took that loss. So let me expand it. Still what, selling bearish opportunity sell. Just, you understand? And like I said, counter trend, and it turned out to be what, break even by risking what, 1%. You know the reason why I said I was going to risk 1%. I already had 4.something% on my account, so I was willing to risk for 1%. So now look at what I said for this trade. Now I said daily Wednesday daily candle closed below the low of Monday candle. With this, I was bearish bias for Thursday. Also, price was at a premium zone, which was an added confluence to my buyers for that day. You know, guys, if you have been watching my video so far, you see that I use this concept. Whenever a candle closes below a candle, I look for bearish opportunity for the next day. If it closed above, I look for bullish opportunity for the next day. You can actually use that for what? For a directional bias of a particular day. So you can see in this case, this is my Monday candle, this is Tuesday, so this is Wednesday. It closed below this low, so with a very strong bearish what, pressure momentum. So I expected that Thursday we'll get a bit of retracement to at least 50% of this candle before price could do what, could sell off. Because when a candle opens, when candle opens, manipulate, you understand, manipulate, rather consolidate, manipulate, and what, distribute. So in the point of manipulation, that is where I'm looking to do to enter, because that is where the big move will now start after that manipulation. So that is the reason why I said I was looking for price to come back to at least 50% of this Wednesday candle before we could do what, sell off. Do you understand? For that Thursday, that was the reason for this mode selling opportunity. And in this case, guys, I saw my CRT signature. You understand? Waiting for what? I saw my CRT signature. Okay, wasn't it? My 4 hour time frame. Well, this was my 1 o'clock candle, and I waited for the 5 a.m. candle to push the high inside of a key level. Everything happened inside of a key level, and you can see, guys, the direction. Just this move alone is already showing us what a bearish move. You understand? Generally, it is bullish because of, look at the range, the daily low, and this is the daily high. But we are inside of the range. But when we look at the minor structure, it is actually doing what? It is actually doing what? Selling. It is a bearish momentum. Do you understand? So I was interested in what? In selling opportunity, and I waited for my CRT model, which happened here. Upon seeing that, I went straight to my what? To my 15-minute time frame to look for my what? My change of state of delivery, which I got here. Do you understand? So I got it here. So price starting in, went straight to what? 2 RR. Remember the rule. Whenever price goes for 1:2, I go break even. So guys, you can see I went break even, and price came back to tap me in before falling, but eventually it still went back. So that was a break even trade for me. Do you understand? I reached 1%, so it was a break even. So I felt a little bit emotional because I felt like this market would have gone straight. You can see, if you don't talk to yourself while trading, like in terms of, you should know that anything can happen. You are not the controller of this market. Anything can happen. Even if you got the best A plus setup, you can still turn out to be what? A losing trade. So this was a break-even trade. So I was still much more interested in what? In selling, which turned out to be what? The second trade. So let me show you guys the second trade result, which was I think I've already showed you guys, which was, this is the second trade, which was a losing what trade. Now let me show you guys. Still risking what? 1%. Still risking what? 1%. So it is still what? Bearish opportunity. Do you understand? So you can see daily time frame, same analysis, H4, same analysis, H1, same analysis. So but what the difference here is the what? The entry, which is 15-minute time frame. Now guys, I saw my change of state of delivery. So perfect that, look at the structure. Look at the structure. I marked out this key level again, and price did what? Sold off from this key level and gave me my change of state of delivery. Then I entered with what? 1%. And guys, look at what happened. The market came back to stop me out and sold off for a bit and went back. Look at what happened. Went back to soup that same what? That same high, that same 4 hour high, like a mad, and did what? Sold off. That is the roller coaster that comes with what? Trading. You can never know what will happen. Your only job, the one thing you know you can control, is what? Your risk management. That is the only thing you can control, and your emotion. That is the only thing. But to control the market movement, you don't have that power to do that. Look at what the market did. Came back again for that same place that's been turtle souped already. It turtle souped again and what? Sold off. But this all happened around my out of my trading time. So you can see now sold off. To take out this what? This low I was looking out for. So that was the losing trade for me, 1% that day. So that was 1% for me lost on that day. So now coming to the next day, which I got a trading what? Opportunity again. Still following my rules, the same thing. I was still what? I was still bearish what? Bearish bias for that same day. Do you understand? So if I'm to click the trade and show you why, the reason why I took it, you can see it was what? Selling, which is bearish, and it turned out to be what? Loss, losing, risking what? 1%. Do you understand? 1%, guys, and it is what? Counter trend. Please, when you see it, if you're seeing this $60, it is not actually $60 I lost, because this journal I've been using it to journal from my 6,000 free trial account. So I don't want to change the figure anymore. That is why for 1% of $6,000 is 60. But this, in this case, it is $15,000 I'm using. So 1% will be about $150. But due to I've already made some percentage, it will actually increase from that 150 to there about 180 or something like that. So ignore the $60, but just know that this trade was 1% risk I did. So now you can see, guys, look at this daily time frame. I want you to look how I look for my daily buyers. Do you understand? I said, since the Thursday daily candle did not sell off after a 50% retracement on Wednesday of the Wednesday daily candle, I projected that Friday candle would be what? Bearish buyers. So if I'm to zoom it, look at it. This is the Wednesday candle. The Thursday, I said, okay, it's going to retrace. It retraced back into this 50%. This green zone is the 50% of this candle. So now, upon seeing that, okay, it is around the 50%. Do you understand? I expect that Friday will definitely sell off. But look at what Friday did. And let me show you guys. This is the Friday candle. Now look at what Friday did. So upon seeing that, look at, I spotted a key level which is on the 4-hour time frame in that 50% range. I spotted a key level and the market actually reacted from this key level. So I expected that since the market has not taken this first draw on liquidity, which is this low, I expected that since it is still in this range, that okay, the market want to actually grab more liquidity to sell off, and I saw my signature. Now in this case, I marked out my wall, the high and the low of the wall, 21 o'clock candle, and I waited for the 1 a.m. candle to push the high, which just happened here. Upon seeing that, that is my signature alone. Upon seeing that, I went to my 1 hour time frame to look for a candle that will close back in, showing me a selling pressure. Now you can see this candle, this red black candle close back in, giving me what, a selling signal, using this fair value gap, another what, key level, 1 hour fair value gap, another key level. So guys, upon seeing that, I head straight to my what, to my 15-minute time frame to look for my what, change of state of delivery. This is basically our trade. The only thing there is that it's just for me to do what, I'm already being mechanical. I repeat things over and over again. So the only thing I'm just battling here, I'm saying I'm battling, is my emotion. I'm getting better, but I'm not yet satisfied. So I want to be more better. So in this case, guys, I saw my change of state of delivery, and you can see market tapping in, went for a beat, being roller coaster, testing my emotion. This trade tested my emotion so badly. So it came back. It did this, wasn't actually up to 1:2. If not, I would have gone break even. So it came back almost to my stop loss. Came back again, gave me joy. Almost to 1:2, but it didn't hit 1:2. Then I didn't go break even and it came back to 1 to stop me out, risking what, 1%. So this was around somewhere around 1 point something percent because this is commission. You understand? So that was a loss for me on Friday. I'm going to show you guys on this. So currently, guys, what I'm currently on my account is I'm around 2% on my account because this account hit 4%. So now I lost 2%, so I'm back 2%. You can see how trading can be. Trading isn't all about winning. When you lose, you win. But just know that at the end of a trade sample, either 10 trades, 15 trades, 20 trades, you will definitely come out to be profitable. Only if you know what you are doing. Only if you know what you're doing. So guys, I want us to understand that risk management is the key. Risk management will keep us going. So the only thing we could do is to do what, to protect our capital and always apply risk management. I'm saying this to you, I'm saying it to myself. This week, we hope for better. I hope to come back stronger. I'm not down. I'm still 2% up. The only thing that I just hope to this week to be profitable that we're entering. So guys, without wasting much of your time, if it's something you like, please do like this video, turn on post notification not to get notified when I post new content like this on my channel, because every week I must drop a video about my journey, my challenge journey. You understand? And if it's something you're interested to join my free Telegram channel, click the link below. And if you want to get an account with the Propfirm I use, which is FUNDEDNEXT, click the link below. You'll get an account with them, and they are very reputable and trustworthy. Without wasting much of your time, guys, I'll see you in the next video. Peace out.